if banks are able to drop rates, it would be very good for the NBFC space. And therefore, we are touching base with the management of an NBFC company, M&M Financial Services. The third quarter saw the highest growth actually in assets under management for this company. Quite a contrast from many other NBFCs which saw a serious slowdown in their loan growth and disbursement growth numbers. Ramesh Iyer, Vice Chairman and Managing Director of MMFSL, joins us now. Morning, Ramesh. Thank you very much for joining us. Just describe to us the situation in this quarter, in the first 55 days. What has been the cost of funds? Has the flow of funds been good? What has been the demand for money? Just an idea of how business has been.
So I think definitely the availability of funds has not been a very serious issue as we saw possibly around the third quarter, where we had to put in extra efforts to make sure that sufficient supply was available for growth. As far as cost of funds is concerned, again, kind of they have remained stable over what it was the previous quarter, but they are remaining at an elevated level. That's the other thing. I think overall, I would think that from a liquidity perspective, at least for us, we are in a comfortable position. And as you are aware, we also had our retail NCD issue where we kind of collected close to about 2,000 plus crores. Our FD retail is doing well. So I think with a multi-product approach on the liability side, so far as liquidity is concerned, I won't put it in the concern zone. But I must say that the rates have remained elevated, at least at the same level that they were in the third quarter.
Okay. Mr. Iyer, good morning, sir. So we're just trying to sort of understand to what extent this interdependence on the mutual fund sector is sort of, and how it's playing out from an NBFC perspective. So for your firm, are you still drawing in sort of any lines from mutual funds? Do you still have CP exposure? And in general, how do you expect this to play out? This source of funding, do you see it coming to an absolute end for NBFCs?
So I would think so. Like as far as CP is concerned, we are at around 7-8%, which is what we had agreed to be even at our ALCO level. In as far as other sources are concerned, we have been able to raise money from the banking system. We have been able to, as I just said, we've been able to raise retail deposits. We have securitized a small percentage of our portfolio. We normally stay around 10% and we are below that level. I would seriously think that the ability to raise funds for good NBFCs is definitely there. I don't see that, as I said, as a severe problem from an availability perspective.
And what about the blended cost of the money that you're raising? Generally speaking, because of the market tightness, has the blended cost of funds gone up in this quarter?
So yes, I mean, one has to look at two ways. One, since we already had enough of the past liability, therefore the overall cost of funds for us might have gone up by just about 50-odd%, that is 50 basis point. But if you were to look at fresh borrowing that we've done in the last couple of quarters, at least last quarter and continuing to do so now, would be at least about 60-70 basis point higher than before. And therefore, I said that the cost has remained elevated. And I must also quickly add that, given the market condition, we've not passed on all this borrowing cost to the consumer. It's been possibly shared almost equally between us, with the OEM, with the dealers, and very, very small percentage, maybe 20 basis point was passed on to the consumer.
Okay, so margins could show a bit of compression this quarter?
It's actually an advantage to us, as you see our credit cost substantially coming down, releases a lot of ability to be able to absorb some of this cost. So I would not be worried. We don't see really a margin pressure, and also the margin is an outcome of product mix. We are seeing a pre-owned vehicle growth better than new vehicle growth, and therefore the margin pressure won't be there.
Okay, of course you can always stave off what lose on margins by increasing volume. Do you think, what do you estimate can be the volume growth, loan growth volume this quarter?
So, we saw it in the third quarter. We've been gaining a little market share,
Yes.
and we're not seeing too much of competition around in the rural market. So even though there is a pressure at the dealership levels, the volumes are kind of not aggressively growing, but we've been able to retain our growth rate coming from, again, multi-product approach has been one of our advantage. And as I just said, pre-owned vehicle has been growing for us pretty well. So which is an added advantage that we are in. Our commercial vehicle base was low, and that's our other growth engine. So overall, I would still think that we see it as an advantageous position for us with deep penetration, multi-product approach, and a relationship with dealers across the country. And pre-owned vehicle is our added growth engine.
Mr. Iyer, finally, in the last quarter, you improved your asset quality very substantially. I mean, I think it was 130 basis points dip in the NPL levels. Some of these concerns that we've heard off and on, particularly within the MSME space, are they well founded? I mean, what are the trends that you are now witnessing with respect to borrowers?
No, so far as we are concerned, we don't have any major SME exposure. We have about 5-7% of our book in the SME, and that's largely to the same, the suppliers of various auto component, the agri businesses. So our representation of the SME position would not necessarily be a representation of the overall SME. We don't have any exposure to loan against property and things like that. So I think our book is purely and largely just automobile, tractor, all retail finance, and as I said, just 5-7% in the SME segment, and again connected to the auto agri world. So we are not a true representation. We don't see those kind of problems faced by some of the SME segment that we have participated in.
Actually, what is your split, Ramesh, in terms of loans to the various sectors?
So if I kind of, the Mahindra auto business is about 25 odd percent.
Okay.
The tractors are about 17-18%. On the LMB, that's the car segment, we have about 28-30%. Commercial vehicle construction equipment is about 8-10%. Pre-owned vehicles are in the same range, 8-10%. And as I said, SME about 5 odd percent.
Okay.
Broadly, this is the breakup of our 100%.
Okay. And how much is outside autos completely? You had some home loans, didn't you?
No, that is a separate
Housing
subsidiary of ours.
Yeah.
That is a rural housing business, and they have a book of about 7,000 crore. Yeah, that is a subsidiary. They have about 7,000 crore book.
Okay.
So far as the Mahindra Finance book is concerned, outside of auto is only the SME space, which is about 5-7%.
Okay. And over there, considering that, both CVs and autos have shown rather severe fall in sales and unexpected from November onwards, that pressure is not telling on you?
No, so, if you look at the advantage that we have had is actually a multi-product approach. So we don't have a very high market share in any of the product. So to the extent that if you are losing some in certain product, we've been able to cover it up through the other products. And as you know, all OEMs are focusing rural. They have increased their network or dealership points. And that's definitely adding to our numbers. Like, if you look at 1 year back, we didn't have Renault and Nissan products in our balance sheet. We are now doing about 500 odd vehicles a month of each of these products. So that's an added number. And so far as, again, commercial vehicles are concerned, we are a very insignificant player in as far as the large fleet operators are concerned. We have no exposure at all. So it was on a very low base, and that's actually been our very aggressive growing segment.
Okay.
Like it's growing at about 40% plus over the base that we had. So which is why, our book is reflecting a growth in spite of the fact that the industry is under pressure, even at the OEM levels, if the numbers are a little low. And we have been gaining a little market share as well with our deeper penetration. We added 100 branches last year. That's panning out good for us, going deeper. So I think put all of this together, we seem to be a little more comfortable than many others in the industry.
Okay. All right, Ramesh, thank you very much for giving us an idea of how business is panning out in the fourth quarter.
Okay, before we take a break, just want to, I think we should flash that alert. India's #1 retail brokerage, Zerodha, that's down since morning. And, a lot of people writing to me on Twitter as well on that. And, that's, it's happening with, too much frequency now with Zerodha. So, Nitin Kamath and Nikhil Kamath.
Affecting the volume of business.
Yeah, they made a great company, absolutely no doubt about it, give it to them. But, the technical glitches are now happening with far too regularity. And like they say, with great power comes great responsibility. That's something that they need to sort out. Having said that, for those writing in on Zerodha, there's clearly an issue right here. If you go for only low cost, the chances that on big days you get stuck, right? And today is a big day because you have the market, of course, seeing a big surge.
Diversification. And you should have two accounts.
Exactly. You're missing out, because the cost is your only criteria. But having said that, that's something that Zerodha really have to look at. Because if you're now India's largest retail brokerage, you can't have these issues coming again and again. It impacts the retail clients.
Okay. Well, for the moment, market's doing extremely well. 5 stocks and more in the green compared to 1 in the red. So, 90% of the stocks higher than where it was when we left yesterday. We take a break. Up ahead, we have a very important conversation coming up for you. Pankaj Patel, chairman of Cadila, rarely spoke to our Ekta Batra. He is speaking about price erosion in the US, but believes that it is reaching the bottom. More from this conversation in a minute.